Alright, gangsters, welcome back to a little review. We're going to hop into, like I just said, a little review. I did not trade today, so we're just going to go over today's price action. So I did already like everything you see on the chart, like I just said, I just sat down on my computer. So everything you see on the chart is stuff I had marked out last night, like 1 in the morning type shit. So let's just go over some of these levels real quick. Daily fair value gap that we drew into yesterday. This was today's candle. So yesterday, today, this is tomorrow's candle that already started. As you can see, it looks like we're headed back up. We have a little fair value gap here, so we'll probably see price retrace into here today. Anyway, let's go over these levels. Daily fair value gap here, daily fair value gap there. Then we got buy side, more buy side up here. And this is an old weekly fair value gap. None of these are really relevant. We're just paying attention to the one that we are closest to right now, and it looks like I just said, looks like we're already putting a swing low in there. But we're going to see exactly how this candle here formed today. So daily fair value gap that we were drawing into. Let's go ahead and start dropping to our lower time frame charts here. We are on the 1 hour. Actually, before you're going to do that, we're going to go to the 1 minute, and we're going to get some key levels on our chart. The first key level we always place on our chart is the midnight open. So we're going to go back to midnight open in price, which is right here. This candle here, .01 candle on Weeble. Midnight open in price, this candle here. We're gonna pull this out. Always midnight open in price is an important level for us. I don't even know if there was any news today. We're not going to check to see if there was. But midnight open in price, we're gonna drag this all the way out, even to today's price action, just so it's all the way over there. Next one we're looking for is the 8:30 open, which is somewhere around here. Boom, 8:30 open is this little blue candle here. We'll pull this out as well. And then the last one we're going to do is the 9:30 open. So again, pull this out. And finally, let's go into the 9:30 open, which is going to be right here. This red candle. Oh, no, not this red candle. I'm sorry, the candle before that. This candle right here. 9:30 open. Boom. So all of our opening prices are pretty tight today. All of them are pretty tight. So with this, with them being so tight right when New York open is, coming about, like the direction is unclear. So if we were bearish, what we'd want to see is like midnight open, 8:30 open lower, and then 9:30 open even lower. Then we know order flow is heavily bearish, and then the same thing would be the opposite for bullishness. We want midnight, and then 8:30 above that, and then 9:30 above that. But they're all tight, so we don't really have a clear direction. We can expect today to be kind of a back and forth day. However, as you guys may already see, there's trades here. So let's go ahead, go back up to our 1 hour, see if we can identify any targets that price may want to draw into. Now, if you're getting good at spotting these, you may have already spotted out this little 1 hour fair value gap here. We'll make it yellow for the sake of this. And yeah, that's the first and only fair value gap that we see here on the 1 hour chart. We have this higher one here, but this first one is the one we're going to focus on. So there's our 1 hour fair value gap. Let's drop down into the 15-minute, see if we have any 15-minute levels leading up into this open that we could target. So this white vertical line is the start of the new trading day for futures. So that's why that's there. So all of this was considered yesterday's price action all the way up until right here, 1700. So this is 1700 to 1700. All this right here in between those two is today's price action. So we've got that 1 hour fair value gap. This is where the market opened at 9:30. This candle here. And when this finished printing, we see that this impulse up. Our next 15-minute candle continues higher. We don't wick down into here. So what is this? 15-minute fair value gap there. Pull that across. We'll make this one orange. That's our 15-minute fair value gap. So let's drop down into some more lower time frames. We'll take a look at the 5-minute real quick. Again, market opens on this candle here. We wait, we still see nothing super clear yet. We get this impulse. We have this little fair value gap here on the 5-minute. We'll add this one to our chart just so you guys can see where price is bouncing. We'll make that purple. Hell, we'll even drag it out even further because as we can see, we get multiple touches of that. Right, so at this point, when we've closed above, how high does this go? I know it takes this buy side here, right? This is very obvious buy side liquidity being taken there. We have to see after this buy side is taken, do we want to go reach for sell side? We get this false move. This is the Judas swing. We get this false move lower. It looks like it's going to break below these lows, but you wait for the candles to close. Remind you, this is only a 5-minute chart. So if you can't wait 5 minutes for a candle to close, this is not the business you want to get into. So buy side's taken, false move lower. We close above the next candle, bullish back above. Again, we retrace, but still no closes below that 15-minute fair value gap. And where are these candles here respecting within that 5-minute fair value gap? Now you can already start to see like where we're framing our trade, right? Again, like I said, we took buy side there. This took this buy side here, all these relative equal highs. Right, so this candle took buy side. Did it move towards sell side and take sell side? We took sell side below here, but we didn't come down here, right? So we're still expecting bullishness, unless you're not, because you can still totally expect, you know, maybe retrace and take this low. Do we take those lows though? No, we don't. Right, so we put in a low, we trade higher up into New York. You know, New York open happens, then we get this false move. Where does this low take? It takes sell side below this low here. Right, so sell side's taken. What happens after? Again, look at the areas we're respecting after sell side has been taken. Sell side's taken. We're respecting consequent encroachment of that 15-minute fair value gap. Basically just 15%. That's what consequent encroachment is, 50%, not 15, but 50% of that gap. So this is the 15-minute fair value gap here. We're respecting consequent encroachment. We don't get any closes or opens below halfway. And I'll make that darker so you can see it easier. Right? Price shoots up. Where we then respect this 5-minute fair value gap here. We're going to drop down into a lower time frame. From this point, from the 5-minute, I'll just go straight to the 1-minute most times. Right? So on the 1-minute, this gets pretty ugly here. This does look like, you know, a shift in structure lower, right? We would say this is, you know, a shift in structure lower. We took out lows, took out lows, took out lows. It looks like a shift in structure lower. We retrace here. Here, I may have taken a short. I may have even taken a short here and tried to target this low. But the moment we come back up here, we're out of it. Even the moment like this, we come back above this fair value gap right here, we'd be out of it. Right? The moment price trades above there, we're out of it. That's if we were to take that short, right? We would wait. So after we get shaken out of our short there, we would take that trade and we would lose that, like 100%. I would take this trade and I would lose it, right? Because again, we come back above this fair value gap. I'd close it right on this candle. We wait. What happens? Buy side's taken. Right? At this point, we would want to see prices head towards sell side. Where's our sell side? Our sell side would be down here. So after we take this high, the next spot we would want to see price go, if we are bearish still, would be below this low. Does price do that? No. Do we even get below 50% of that fair value gap? No. Inverse fair value gap forms here. Get fair value gap. We inverse it, then we reclaim it, and then we reclaim the inverse fair value gap. You could be entering long in here, right? There's this fair value gap here, right? So you could be entering long inside of this box, and your stop loss would be below this low or below sell side right here. So let's say if we were entering long below this box and we're targeting our very obvious drawn liquidity. If we're bullish, again, that comes from this 1 hour fair value gap up here, right? 1 hour fair value gap. That's what we're expecting the draw on liquidity to be if we are bullish. All right, so say we take a long in here just at the top of the block. We're not even trying to get the best of the best entry. We just want to get somewhere in here on the top of the block. Stop loss again below this candle low right here, this blue candle. We want our stop loss to be below there. So it can be right here where the sell side is. Right, that's about even. It doesn't have to be exact, but stop loss below there. Again, entry at the top of that block, which would be right here. My shit's fucking up because I have magnet mode on, but you get the point. You can enter at the top of that block, right? And then we target that 1 hour fair value gap. How many points is that? 129. How many points are you risking? 53. That's a bit much. That's a bit much. Usually I like to risk anywhere between 15 to 30 points. 53 is a bit much. But the moment this starts running in your favor, you can start reducing your risk. So you're targeting, 129 points. Do we get that? Pretty fucking easily, right? Where would you take your first partial off at? Above this high right here. This is where your TP1 would be. How many points away is TP1? 60 points. So look at that. That's already a 1 hour trade. Just a little bit over a 1 hour trade. 60 points. That equates to $120. If you're trading the micro contracts, if you're trading the minis, that's 1,200, right? We're targeting, again, the bottom of that 1 hour fair value gap because, that's the obvious draw on liquidity. If we're going to retrace anywhere, we want to see that 1 hour fair value gap be rebalanced into, and that's all this is doing. The market is rebalancing into that 1 hour fair value gap, right? So 130 points. Let's say we target the top of it. Let's say we target consequent encroachment, and then let's say we target the top of it. Consequent encroachment gives us 146 points, and then the top of it gives us 163 points. Do we get that? Yes. Yes, we do. What happens after that? Market structure shift lower. Retrace. Respect consequent encroachment. Where do we go? Lower. Back down into this 5-minute fair value gap. So this was a buy side trade you could take. The moment you see market structure shift here, you wait. What hours is this between? We don't trade between usually like 11:30 New York time, so 10:30 our time. Really, 11 our time to like 12:30 our time. But 11:30 we can expect price to start to slow down because we're heading into the lunch session. So the lunch session starts right here, and that lasts until 1 in the afternoon to about 1:30 in the afternoon. Boom, boom. We're not trading in between this session, right? We set this high, we come out of this session. If we are expecting prices to continue higher, we would want to see this high be taken. Do we take that high? No. Do we take this low? Yes. And we just continue taking the lows, right? The moment we don't take this high up here, we create a fair value gap here, right? The moment we don't go for this high and then we reject out of this fair value gap, we could be taking shorts back down to at least this low here, because this would be our obvious sell side level. So we short at the bottom of this block as we see price leaving this zone. Let's say our stop is just above this high, or let's not even do that. Let's say our stop is consequent encroachment of this gap, just to give ourselves some room. 42 point stop, so you're risking about 84 bucks on this. And then where's your target? Again, this lunch session low is the obvious sell side level, so we're going to target that. How many points away is that? That is 69 points away. So almost 70 points, which is 140 bucks. And again, we want to be entering on this trade as we're leaving this fair value gap after we were not able to go take lunch session high, because now we're expecting this to go take sell side. So that's TP1. TP2, if you want to hold a runner, would be back down into that 5-minute or 15-minute fair value gap. So let's say we target the top of that. 113 points, 2.6R trade. Consequent encroachment of the 15-minute fair value gap, 131 points, 3R trade. Do we get that? Yes, we do. And then price reverses. Right, so there's 2 trades that you could have taken today. There's the logic behind them. Is there anything in here kinda after we take, after we complete our objective here, we get this bounce, fair value gaps created here. Let's say we're not focused on this move. We're not focused on catching a move after this fair value gap's created immediately, because we don't test into it. We bounce here. Do we test back into that fair value gap back up here? Yes, we do. What happens after? We go for the low. When we trade back up, are we able to get to that high? No. You can take this entry here. If you got the balls to do it, you can take this entry here. Again, targeting this low. If we do that, what does this look like for us? Again, stop loss now at this high. Just above it. 24-point stop. Now that's a stop that I can get behind that stop. 24-point stop, basically $48 per contract, and then this would be the first low I would look to target right here. Do we get that? Yes, we do. That's 51 points, aka 102 bucks. Right? We get it pretty easily. So you could take that, tap back into that fair value gap there. You could even enter back up into here if you're confident we're not going to go for this high. And your stop would just be above that high. It's quite simple, right? And then if we want to leave it to run a little longer, again, target into that 5-minute fair value gap that's right down here. And consequent encroachment is also a target of that gap. So we'll highlight this real quick. Top of that gap yields us 63 points, 126 bucks. And then consequent encroachment yields 67. So just a little bit more in there. On this candle here, we do blow past that 5-minute fair value gap. But like I said, I would just target the top. And that'd be the easier trade. And that's 60 points. Again, that first target is only 10 points away, so you don't capitalize on much more of movement if you hold. But yeah, that's 3 trades right there. Those are the 3 trade opportunities that I would have possibly looked at today. Again, like I said, this move here, we very likely would have entered short somewhere in here and got stopped out on that trade. But there were three other really good opportunities to take outside of that one. And yeah, I guess I'll catch you motherfuckers in the next one. Peace.